I like the product and I like the management team, and it's definitely an appeal. It's the most appealing IPO I think I have looked at in 3 or 4 years. Simple, like Reddit was interesting, and their turn towards advertisement revenue has been incredible and great to see because very few businesses seem to be IPOing and having success.
Well,
But
that's a great wrap. The best IPO you've seen in 3 to 4 years. Anne Marie. Usually, Mike opens the show with a recent quirky story from the business world, but I thought we should go straight to the action and do something different, being as he's not around today.
yeah,
So I'm going to hit you with a question,
hmm
and then I'm going to answer the same question. So here's the question: if you had to buy just the one stock you most believe will go up from here in the next 12 months, what
yep,
would you buy? And also, you're only allowed to give a one sentence explanation. So it's not a mega pitch,
yeah.
literally the name of a company and what it does and why.
Okay. My pitch for a 1 year horizon would be Prologis.
Oh,
They're a REIT and they control warehousing, both in terms for e commerce companies, but also more recently, they're getting into data centers. And my one sentence pitch is companies are going to want to bring in more product because of tariffs, trying to jump over those tariffs. So they're going to want to hold a lot more product stateside. And number two is data centers are big for AI. Boom.
boom. Nice. Okay. I want to dive in, but I'm going to keep by my own rules. Right. I'm
Yep.
going to pitch one back to you. I
Okay.
would go with Topicus, which
Oh, yeah, yeah.
is, yeah, you know it. It's a low
Mhm.
risk exposure due to it has really stable recurring revenue. It has really disciplined capital allocation. It's backed and part owned. Almost half of it is owned by Constellation Software, which is one of the most proven compounders in the public markets. It's a company I own shares in. It's a company in
Mhm.
the Horizon portfolio. It is an absolutely magnificent business, and as far as I'm concerned, any time is a good time to buy it. So that's the one I'd go with.
There you go. Yeah. Don't even think about the macro. Just if you love a business, it's always a good time to top it up, I suppose.
Look, I just touched on a Horizon, so here it comes. But this is very
All right. Now go
interesting
on.
to our listeners. Yeah. I mean, Topicus is one in Horizon, but just while I have that segue there, I'll grab it. And as most of our listeners know, I run a service called Horizon, a word you just used in your pitch. And it is a long term growth portfolio that is a replica of my own personal investments, right down to the last and latest investment I've made. And the idea is to find one or hopefully two 50 to 100 baggers, which create massive wealth alongside, I have to say, a decent helping of mediocre and not so good other stocks. But when you have one 100 bagger or even a 700 bagger, as I've had with Netflix recently, you realize how it really only takes one good investment to change absolutely everything. And today, the Horizon portfolio is, as I predicted, the first few years are always ugly. But right now, from the invested value of $264,000 that's been invested in the current portfolio, it's up about 90 grand, which is 34%. And a couple of big winners in there. There's one that's up well over fivefold, one up well over threefold, and then a handful of two baggers, and so it continues. Well, as our listeners also know, this August, Thursday, 21st of August, we're launching the inaugural Investicon on the floor of the Irish Stock Exchange, which is an absolutely beautiful place you got to see, where we're going to have 8 domain experts that are going to reveal their top 3 investment ideas for 2026 and beyond. From AI, we interviewed Anthony there a couple of weeks ago in Stock Club, to global stocks like with Peter Slagers, and every speaker is going to deliver actionable insights with absolutely no filler. So our offer today is, if you sign up for Horizon in the next few days, you will get a ticket to attend Investicon. That ticket is worth €450, which is more or less the price of Horizon, which is priced in US dollars. So that's my message to you folks. Sign in, pull in. If you're driving, sign up for Horizon right now today. If you're abseiling, climb back up to the top. If you're baking a lovely cake for Sunday, stop the mixing, go and sign up for Horizon right now, because we're going to stop that sale when we've hit a point. that I haven't researched, but it's on right now. But it's only on for a little while. Subscribe to Horizon today and get a completely free ticket for InvestiCon. No catches. There is nothing like these two services anywhere. And the fact that we're bundling them is a first, and is something that I'm pretty certain everybody will be happy they did once they do it.
Very good. That was very good, nice, concise pitch. It's also worth saying it's such a unique thing within the Irish landscape and within the Dublin landscape. Number one, like to be an investing media company, but number two, we are first and foremost probably the first investing um, big live event
Yeah,
coming to the city. So it's exciting on the
I
cutting
spoke to,
edge.
definitely. I spoke to. I probably said this on a previous podcast, but I spoke to the founder of Web Summit a couple of years ago. Who said, just start small, start brilliant, make sure there's a
Mhm.
buzz, get a lovely room, fill it to the brim, and that's what we're going to do. And that's why we chose the floor of the Irish Stock Exchange as opposed to the round room in the Mansion House, which is the Lord
Mm.
Mayor's home for non-Americans or for non-Irish, for our American audience, and it's a ginormous room, as you well know, Anne Marie. The two of us looked at it. It's like a giant circus top, uh, old history style. But to fill it is possible, but it just wouldn't feel full. And we want to
Yeah.
create a buzz and a network, and that's Investicon this year is on the Florida Stock Exchange.
Yeah. Also, the lighting inside the round room is very sophisticated. It would be like we were hosting Who Wants to Be a Millionaire. Like
Yeah.
that was the vibe that that stage had. But I do think we will get there eventually. We will have, I think a musical number, maybe a comedian, warm everybody up, and then we'll come out with the hot and heavy stock pitches. That I think is our endeavor for um, next year. Also, it's worth saying if you're on the fence and you're like, oh, I'm not sure if this stuff is for me, go back and listen to the Stock Club episodes that went out with Peter and with the AI investing expert. Obviously, I'm biased because I have to edit all of them. So I have to sit and listen back to all of them. But they were excellent standalone Stock Club episodes. They were probably some of the best we put out this year. And it is a very solid plug for the type of information and how good the
Hmm.
speakers are going to be at the event. So if you're on the fence, go back and listen. And I'm sure it'll get you over the line.
Thanks, Amo. Yeah, well said. I know from over the years we've had three subscribers. So My Wall Street has had a lot of products over the years, and at one stage a huge number of paying subscribers for a product which was costing a holy fortune to maintain. And alas, we had to deprecate that product. But we had three very famous people. I can't say their names, but I just think relationships were forged at a time when My Wall Street was like a rocket ship, and three mega famous performers. I don't mean famous just in Ireland. I mean, certainly one of them is known to pretty much every adult in the world, and the other is known to every adult in the Western world. And then the third one is very famous by Irish standards. And they were subscribers. I was thinking maybe I could ask them to come to Investicon, knock out a tune. Born in the USA, baby. So okay, so let's push on.
Yep.
Anne Marie, there is an IPO at last.
Oh my
We've
God.
come
Oh,
through the desert, and there
yep.
isn't just an IPO. It's a very interesting one, and it's
Yep.
one that my wife said to me years ago. If this company ever floats, I'm going to buy shares in it, and she'd have
Mhm.
a degree of domain expertise in the area. So I was especially curious when I saw the S1 go in, the paperwork to list on the stock exchange. And equally, you had mentioned it to me, and I'm pretty sure you are a user of the product. Would I be right in saying?
Yeah, I think several of us in my Washer are users of the product
Oh,
here. Yeah.
oh, so we're okay. Well, look, rather than
So we have a license if you'd like to ever
uh-huh,
go in and have a look around.
uh-huh. Okay, no, that's it. Okay, I'm okay. I'm all right with that. So,
Yep.
without any more kind of teasers, tell us what's the
Yep.
company, what's going down.
Yeah, the company is Figma, which is if you exist in any kind of technical role within a tech company, you will have heard of Figma. It really has made itself into one of the most important softwares probably and certainly in the app world and definitely in the developer world at large. For those of you that don't know, Figma is an interactive design tool that was created to streamline collaboration and access across an organization. And I'm sure you're thinking, what does that mean? If you
And
have
that's not
no
written down in front of you. You memorized that, right?
no. Yeah, oh, yeah, yeah, right, it's right off the top of the dome, but I'm sure if you have no exposure to design or creation of apps or websites, you're like, "What does that mean?" Well, basically, I'll show you the problem that the developers here were trying to fix, which is back in the day, if you were a designer of an app or a website, you used to have to design it in Photoshop, which is not ideal because Photoshop is not really meant to handle like a shapes and layouts and giving you precise dimensions of how far apart things are and that kind of stuff, the specificity that you need when you develop. It's
Mm,
mainly just a visual tool. So you used
okay.
to have to go into Photoshop and design in that way, and then you would take a screenshot or you would export a flat image like a JPEG, and then you'd send it around to anybody who would want to give approval of that design. So for example, if you were trying to make the My Wall Street app, a designer would create it in Photoshop and then they'd send it to you, they'd send it to a product manager, they'd send it to the developer team, they'd
Oh
send it
yeah.
to anybody who could have any sort of opinion. That image has to go around, right?
Oh, it
And then
sure did. I remember it well, and
yeah.
so many people needed to have a look. It was quite the
Exactly. Everybody
yeah.
wants to have a gawk. Like it's exciting. But then it means you start to get feedback back, right? So your founder might say, "Hey, can you change the color of this button?" Your designer might say, "Hey, that's not our font. I need it adjusted here and here." Your developer might come back and say, "Hey, this is going to be really complicated to build. Can you simplify this aspect?" And all of a sudden you're getting all this feedback. And then that means that you end up having version 2, version 3, version 4, version 5, and all of a sudden all these images are floating about and everybody's confused as to what's the one we're supposed to be working on and that kind of thing. And so
Mm,
that was the essential problem that these two guys were trying to fix. And that is Dylan Field and Evan Wallace, who were students at Brown University who founded Figma in 2012. And they
oh,
basically say in the S1 document and back in the day that Figma is essentially meant to be a design tool that functions like Google Docs. So
yeah.
it's that thing of you can make one prototype and everybody can go in and have a look and you can give people different types of access. So only some people can only view, some people can comment, some people can edit, some people can only edit specific aspects based upon their job title. And so it's this interesting idea that was definitely solving a massive issue in the industry at the time, particularly when app development and web development was really hot. Um, and that's really where we get Figma's central product, which is called Figma Design. It splits itself into three phases essentially. Design mode enables users to draw shapes and frames and components, apply styles, modify layers, basically build out your canvas. And then prototype mode allows you to create interactive flows between frames. So it's that thing of saying, okay, when I click this button, I want it to take me here, and here's what this new page will look like. And then developer mode, which allows developers to go in and isolate specific elements and get code snippets and download assets marked for export. So, Alejandro was our developer. If I was to create a nice image for him on Figma, he would be able to go in and say, okay, this button needs to be this color. Click on that within Figma and say, okay, this is the hash code of this color. I can just export that. It's very clean. So it's nice. It makes sense. You can see how that is a streamlining of production for tech companies. Yes, go ahead. You have a question.
I do have a question. You
Mhm.
mentioned Photoshop. Is that
Yeah,
a Adobe product?
it is. Yes, it's within the Creative Cloud.
Because I'm reading that this is the David to Adobe's
Yeah,
Goliath. That Figma is the one that Adobe, like Adobe is a name that's been around in my consciousness since I first sat in front of a computer. It's always
yeah,
had some kind of software package sitting on a computer that for the most of my career I never actually needed to use. I
yeah.
did on occasion. I probably opened PDFs on it or something without noticing. It's just one of those ever brands that sit with the internet. But
Mhm.
Photoshop was once a cornerstone from what you're telling me for designers, and Figma seems to have built a better mousetrap. Is that correct?
Well, I suppose they work in different ways. I was reading reviews of the softwares today, and somebody said if you are trying to create something, an image, for example, and you need pixel specificity, as
Hmm.
in, almost like an artist, Photoshop is still the place to go.
Okay.
That if you're almost doing the digital equivalent of painting or drawing, you go to Photoshop. And then if you're looking for something that is vector based, i.e., you want a nice clean line, like you're building a logo, you go to Illustrator, which is also an Adobe product, Adobe Illustrator. But specifically for prototyping, which is creating the look and feel of a website or an app or something like that, that's where you go to Figma. And in that sense, Figma is kind of in a world of its own. Adobe has a direct competitive product. It's called XD, and we're going to get into some more kind of competitive stuff as we move through. But when you compare the usage of XD and Figma, Figma is kind of running away with the market. It seems to be the driving force between a designer continuing to use XD is because they are working in a company where Adobe is so embedded into other aspects of the company. It's too difficult for them to say, hey, I would like to get a license for Figma rather than the Adobe suite. These large corporations can be like, well, we have a massive enterprise agreement with Adobe, we're not going to add on this new software. However, it is worth saying that Figma does work well with Illustrator, for example. You can export and import stuff in and out of those softwares. If it's completely fine if you have half the team on one and half the team on the other. But yes, you are correct that they are essentially the David to Adobe's Goliath, but they have a specificity edge, which is how they're able to wedge themselves in to most of these companies. Beyond the simple design product, they began to expand out the product suite the last couple of years. So in 2021, Figma launched a digital whiteboarding capability called FigJam. Again, this is just them trying to get into the earlier aspect of design. So rather than coming into Figma when you're ready to start putting up mockups, this is a space where you can say, okay, product managers, designers, developers, we're all hopping into this whiteboard. Everybody start putting up sticky notes. Let's formulate what should be the driving factors when it comes to design. So that's pretty interesting. It does have a lot of competition there. As you know, we use Twilio, or not Twilio. What's the one that you and Alejandro are always using with the sticky notes?
Trello.
Trello. Yeah,
Yeah.
so like that would be kind of a similar thing to Trello, except it has a bit more of a 3D space aspect. So you can almost be moving things around and dropping in that kind of a vibe. It's a digital whiteboard. And then in June of 2024, Figma launched Figma Slides, which is effectively a competitor to Canva Slides, but also to PowerPoint. But again, you just get a bit more of a design and creative manipulation of it. And interestingly, the reason that they launched this product was they found out that a lot of designers were already making slides within Figma, with the idea being, okay, maybe you have an executive suite that wants to see a design, but they don't want to go into Figma. Like, you know, if we were trying to pitch you something, you'd be like, don't give me the login to Figma because what if I break something kind of a vibe. So what
Mhm.
ended up happening was developers and designers were creating a PowerPoint by simply pulling their designs over into a new canvas and then just showing that to people. And so Figma said, hey, you guys are already doing this. Here's a product dedicated to that just allows you to move these designs into a more formal setting. So that makes sense to me. That seems like a smart, again, a way to upsell and cross sell. And that's really where we are coming into the IPO. There's a few more products that are worth discussing, but they were only announced in March of 2025. So we actually don't
Mm.
know what adoption or usage has looked like so far. And that'll be in my what to watch section
And are they
of this
monetized
breakdown.
products or kind of land and expand type model?
So it's a licensing service. So you can actually,
Hmm.
there's a free version of Figma. You can go in and have a look around and poke around and try out the
Yeah.
software as much as you want. And
Yeah.
then what ends up happening is once you need to add a collaborator, you need to get a license. And then once you have a certain number of collaborators within a company, it's worth contacting them and getting an enterprise license because you're like, hey, I have 50 people trying to access this file. I need a bit of help. It's also worth remembering here, as you were saying about Adobe, Figma was almost acquired by Adobe in 2022 for $20 billion, and that deal was
Mm.
blocked by EU regulators.
Oh.
During an initial internal tender last year, Figma was valued at $12.5 billion. So obviously,
Whoa.
he saw Figma to be a big enough threat that they were willing to almost double
The
Figma's
market rate.
own. Yeah,
Yeah.
basically, that's pretty astounding. So that should tell you how serious Figma is taken within the broader design market.
So
But
has
now,
the IPO been priced, Anne Marie? Sorry, you're probably going to go there, but
yeah, we're gonna go into numbers right now. We I do not act, we are not currently priced.
right.
People have been trying to make an estimation based on the fact Adobe trades at 7x revenue.
Hmm.
So people were saying because Figma has greater growth as a smaller
It's going to
company,
be 10 to 12x.
yeah, it's going to be pretty expensive. And as we tend to say here at My Wall Street, coming out of this IPO, I would say the price is going to be hot. Number one, it's as you said, it's one of the first actually appealing IPOs that we've seen in what, 3 or 4 years. Like it's been
Yeah.
a while. Like
Yeah.
I know we had Reddit last year, but this is the first time we really have seen companies that we saw a lot in 2019 and 2020. Hey, this is a software company, great growth, has a way to become profitable. Yeah, that's appealing. Let's dive in. So I would say it's going to have a giant jump on IPO day, and it would probably be worth waiting the 6 month lockup period because staff are going to start to liquidate shares at that point. Um, so
Yeah.
if we dig into our numbers here, last 12 months, they generated $821 million in revenue. That represents 46% growth year over year. They have a 91% gross margin. Gotta love those software
Come
companies.
on.
Yeah, that's pretty solid.
What?
Yep. Revenue was 228 million for the last 3 months. So that's the first quarter of 2025, January to March. That represents 46% year over year growth. Impressively, 17% operating margin and a net income of $44.9 million. Imagine being a growth software company and coming to the market profitable. This is a new world.
Mm.
That is a big jump, though. Their net income jumped threefold coming into this. So I do feel like
Oh,
their
why?
management knew that they
Right.
were probably going to need to be profitable to IPO because that seems to
Oh,
be where market sentiment is.
I
So fair
see.
enough.
It is, yeah.
They were able to get their 4-year compound annual revenue growth rate as of December 2024 was 53%.
Come on.
Average
Actually,
of
those
53%.
numbers are, you're right. I mean, if you're going to go to market, now is the time with those numbers at your back.
Yeah.
And I also saw a graph recently. I don't know if it was in one of their filings or something I'm subscribed to, about um, the net dollar retention rate per year. And
Yep.
it's that graph that shows 8 years ago, and how that customer cohort's revenues just grown. Then they
Yep.
stacked on top of it the next year and next year and next year. And it
Mhm.
is a thing of beauty. It's a thing of,
Oh, yeah.
like, every business just wants
Mhm.
that. It is like, if you could look at one graph, that's the one you'd look at.
Yep, and their current net dollar retention,
Is
132%.
what? Okay,
Yep.
right. The record, the highest I ever heard, as far as I recall, was with Snowflake a few years ago, and
Mm.
it had 140 or 145% net dollar retention rate. Anything over 100%. For our listeners, it means that the people who spent $100 last year, if they've spent $105 this year, the net dollar retention rate is 105%.
Yeah.
Am I right in that calculation? It's the
Yep.
entire, yeah, it only looks at those who are spending last year, and what are
Mhm.
they spending this year. And an awful lot of businesses have, it goes into it depletes a little because you have
Mhm.
to offer discounts or competitor, but to have that pricing power and a new product set that actually ups it to that level is
Yeah.
absolutely astounding.
132%. And it's worth saying, if we talk about the rule of 40, who maybe people aren't familiar, back in 2020, we were talking about the rule of 40 all the time because it
Oh
was
yeah.
nothing but software companies who were in rapid growth. A lot of them weren't profitable. But basically, it means that combined revenue growth rate and operating margin should equal or exceed 40% for you to know that the growth within the company is worth paying a large multiple for. And so Figma's, with its current numbers, is sitting at 63%.
Oh
So it's
wow.
well over the rule of 40.
Again, the record, to my recollection, the one of the highest I've seen was CrowdStrike. They'd always
Yeah.
parade their rule of 40 in their investor relations deck with great pride, and explain what it is and why
Mhm.
anything over 40 is good. And theirs was 70 something percent. And again,
Yep.
if we're looking at benchmarks for the highest that I can't say I've ever seen, but I can certainly recall, CrowdStrike was the one. So, I mean, again, that is an amazing number. Is there any
Yeah.
number that you'd go, oh, well, that's not great?
No, not in terms of the numbers, to
Hmm.
be honest. Like, they are just so comfortable, and I think I saw an analyst say it's the greatest rule of 40 that we've seen since the IPO of Palantir. So, like, it's
Yeah.
it's it's in very comfortable, positioning here, and just, a few more positive numbers. 95% of Fortune 500 companies are using Figma, 13 million monthly active users, 10,500 paying customers are spending more than $10,000 in annual recurring revenue. It's just 76% of customers are using 2 or more products. So, obviously, not only are people getting in here to use the design products, but they're moving up and down in terms of, the productability. So, maybe they're moving earlier in the creation cycle or moving later in the cycle. And, something I heard one analyst said that I thought was really interesting is this: their sales cycle should be considered a bottom up flywheel. Basically, meaning what seems to end up happening is one designer gets into a company and says, "Hey, I want to start using Figma." Or maybe they're coming from a company where they were already using Figma. So then they start using it. And then what ends up happening is they need to show that work to a product manager or to a developer, and they send it over. And then they get exposed to the software and they say, "Hey, like, this is pretty good. Actually, can I get a license to this software? I want to use it." And before you know it, your entire development team, your entire product management team is looking for a Figma license. And so 70% of revenue for Figma is coming from enterprise licenses, which basically has started completely from organically designers finding this software 5 to 7 years ago and forcing the rest of their company to come on and use it simply because it was better than any of the competitor tools that were on the market at the time. So I think that that is very interesting. But I do want to talk about expansion, because as I said there at the top, 95% of Fortune 500 companies are using this software. We don't know to what capacity they're using it because, of course, sometimes they fudge those numbers and say one designer in this Fortune 500 company is using this software, i.e., this company is using it. And you're kind of like, well, that company has 40,000 employees. So, like, how great is it? But it seems so much of the Figma sales cycle right now is built upon the land and expand. Get one person, expand out as much as possible, upsell, upsell, upsell. As I said, 70% of revenue is coming from enterprises. But as we just discussed, Figma is very much dominating the UI market, the prototyping, the app design, the website design. UX designers live and breathe by Figma. So the real question here is, how do you get everybody else? Like, do you just want to specialize in UI and say, no, this is the only thing you do? Or do you want to be trying to get other positions to be interested in the product? And that seems to be where they're headed. So, as I said, in May of 2025, Figma effectively doubled their product portfolio, which is pretty shocking, like to be heading towards an IPO and all of a sudden go, hey, we're launching all these new products. So we got Figma Sites, Figma Make, Figma Buzz, and Figma Draw. Figma Sites is a product that lets you design a website and directly publish it to the web. Figma Make is an AI powered product that turns a prompt into a fully functional prototype.
Mm.
Figma Buzz is a product for easily creating social media assets or display ads or other marketing materials that remain consistent with your brand visuals or identity. And Figma Draw provides a dedicated space for finer vector editing, something where you're drawing an icon or creating a logo, as we were talking about. Now, this is obviously great because, again, this will emphasize the land and expand model. Hey, we already have the entirety of the product team on Figma. How do I get a graphic designer? How do I get a social media manager? How do I get a web designer? And so that to me is very interesting and a great way to be increasing the enterprise revenue that you already have. However, the thing that we have to remember is it's going to drag Figma into competition with a lot of other companies. As you said, right now they're competing with Adobe and they are the David to the Goliath. They're winning. But if you begin to move into sites, as in development and launching and hosting, you're going to be pulled into competition with Wix and Webflow and Framer. If we want to talk about Buzz, the creation of assets for social media or ads, that means you're coming into contact then with Canva and Adobe Express. And if you want to talk about Draw, the creation of vectors, then you are going into the Goliath of all Goliaths, which is Adobe Illustrator, which is really the industry standard for that type of work. When we had an on-staff graphic designer, she lived and breathed by Adobe Illustrator, and basically every asset for My Wall Street was created from there. And so it's going to be a highly competitive space. I think the advantage there is going to be the same advantage that they were able to bring to product development, which is if you can allow collaboration to be easy and seamless, maybe you will have an advantage. Maybe it's then the thing of your graphic designer can create all the assets within Figma, and then your web designer can be pulling those assets seamlessly from one version of
Mm.
Figma to the other, and it's easier to access brand assets, it's easier to ensure that you're maintaining a brand identity. And so I think that's going to be the main differentiator here. Again, the company was founded with the idea of how do we make collaboration easier within these jobs that are so visual. And so in theory, if they can expand out into other visual aspects such as graphic design, it should work. But it's you're in a competition heavy space, and I would be interested in hearing from people who work in these spaces. If you're a graphic designer, a lot of designers get really entrenched in their tools because it was what they were trained to use. If you have come from a graphic design degree program, you were probably taught effectively on wholly Adobe products, and now someone's coming to you and saying, "Hey, Figma is developing this product," which I read some reviews for Figma Draw, and people were saying it's not Adobe Illustrator. Adobe Illustrator is
Mm.
very sophisticated and high level. It can do some simple stuff, but it's saying what would they have to do to get you over the line and nudge you and say, "Yeah, do you know what? I will start creating within Figma." So that's something to watch. That's number one. My number two thing of what to watch is going to be AI, which that's pretty obvious. That's the thing to watch for every company on the planet right now. And the way that they're using AI at the minute is to make it easier to move from the stages of design effectively. So what they said, Figma Make is to allow you to go in and just say, okay, I would like a UI for this type of app. I would like it to look like this. I want it to have this elements. I want it to, have this color, that kind of thing, and have it spit it out and give it to you, right? The more functional way that they're using AI is moving from a usable prototype to development. So accelerating that so you can hand off to a developer and they can effectively copy and paste out useful code. That is also being generated by AI. I think that's more reasonable.
Mm.
Um, the interesting thing is I think that AI market, again, is going to be incredibly competitive, and probably some of the competitors we haven't even heard of yet because they're being developed secretly. Interestingly, Google just released a free competitor to Figma, which is just focused on AI. It's called Stitch. It's the same deal. You
Oh
go
yeah,
on there to
yeah.
type in and say, this is what I'd like my UI to look like.
Mm.
I read a lot of reviews. Apparently, Google Stitch is awful, like woeful,
Yeah,
horrible,
yeah. I
but it's in
actually
beta.
tried it. I just kind of gave it a brief for profit, just for fun. I got Google sent send me a free trial. Here you can try Stitch, and I dumped in a whole pile of collateral about profit. And the Bride of Frankenstein, with bolts
Yeah.
coming out of its forehead, came out the other end. It was not a usable product based on
Yeah.
my implementation. Now,
Yeah.
the weak link was probably me, but I thought it was meant to be for it. I thought it was meant to be idiot proof. That's why I was like, yeah, I'll do that.
Yeah, and it's that seems to be the main problem with all of these AI tools that are functioning at all levels. There is no ability to get it to give you the first draft and then you get to go in and edit. Even
Yes.
with Figma Make, edits are done via more prompts, which I'm sure if you're an established designer is annoying. If you were to say, "Hey, can you
Mm,
give me a simple layout for this?" and then you would like to go in and mess with individual elements. You cannot do that. It's the same really with, if you use ChatGPT to generate an image, because it's not generating all the layers. You can't go in and say, "Oh, I'd like to move that bit to the left." You cannot do that. It's just, it's a JPEG. It's uneditable. You have to go back to ChatGPT to get it to edit. And like many things with AI, the more you mess with the initial version one, the worse it gets. Like me and Luke have been arguing with ChatGPT trying to get, hey, could you just slightly alter this in this existing image? And all of a sudden, everything's flipped upside down and inverted. And you're like, how did we get here?
yes,
And
I've seen.
and so that seems to be kind of where we're going. So in terms of AI with Figma, it was mentioned in their S1 more than 200 times.
Mm,
And I kind of liked the way they were talking about it, where they said they would like to expand their capabilities to increase efficiency, but they also want to balance that within not ruining their business model, and that their land and expand, they're trying to get as many licenses as possible. If you automate the entirety of this process, suddenly you've taken something that needs 12 people to something that needs one or two. Like, obviously, that's not great for you. So they're trying to balance it. Um, I would assume that's where their IPO money is going. They're trying to
I
bring more
was
of
going to
these
ask you.
services internally. Yeah.
Absolutely. So, look, as a summary, are you interested? Are you lukewarm, or are you cool?
I'm interested. I'm interested for two reasons. Number one, the financials. The financials are great. We
Yeah.
haven't seen financials like that in a long time, 5 or 6 years. So that's exciting.
But when you said
Um,
to me a revenue of 800 and whatever was million, or net profit, was it, it wasn't revenue, was it net profit? 800.
no, so yeah, so almost 900 million in revenue,
Right.
net
So I was
profits
like
like 45.
12x, it's going to be way more than 12x. It's going to be way, like, to for me to suggest it's going to be 12x that, it's going to be even at 20x that, I think it's going to be more than
Yeah,
20x revenue.
with almost a 50% year-over-year
Yeah.
revenue growth.
Yeah.
See, but they are IPOing really at the best time possible because, as I
Yeah.
said, they have really like, they seem to have maxed out the UI aspect. I think they will continue to make money there, and I think revenue will continue to grow, but I
Yeah.
don't think it can sustainably be the driving force of the business in 5 years' time. So they're trying to put these new products out. And you see, the difficult thing is they spent a lot of time in the IPO documentation talking about these new products, but they've only been on the market for what, 3 months? So like, how are we to be able how is anybody supposed to say, yeah, this is a good product, this will be disruptive to Framer, or this will be disruptive to Canva? That's the difficult thing here. And so some of this growth is hinging on stuff that hasn't effectively been measured yet. So that's something to consider. However, here's a caveat to that argument. Because for about a year and a half, they were trying to merge with Adobe. Apparently, what ended up happening internally was Figma stopped developing anything that could be considered highly competitive to an Adobe product, because they were thinking, oh, we're going to be part of Adobe. Why would we bother doing this? And so apparently that created a bottleneck where a lot of stuff that they had had in development for a couple years stopped developing. And then when the Adobe deal fell through, they turned it all on again, which seems to be what some insiders have leaked to the media as being the reasoning why so many products
Mm.
appeared all at one time. So
Ah,
so
right.
that could be a counter argument to that. So one thing I will say, having used a good few of these products, having used Adobe stuff and Canva stuff and Figma, they all kind of serve different aspects of design, I guess you could say. If you are starting from scratch and you're a qualified designer or artist, there's no way that you can give up the Adobe suite. They are the most sophisticated product on the market. But Figma definitely has an ease of use, particularly for this type of design, for the UI design, which makes them the best in the market. And so, from that aspect, they are competition free. But then again, with Canva, you're not making anything from scratch on Canva, really. You're basically doing the equivalent of a collage. You take elements that Canva provides. It's a lot of stock imagery, and you bring in your logos and your brand colors and that kind of stuff, and you build out, I don't know, an Instagram post. But again, it's an ease of use thing. It's so easy. It's all online. It's digital. And so, it's kind of like, yeah, that's how Canva's been able to beat Adobe. I think Figma, in terms of a design capability, is very interesting, but I think it's the collaborative element that will be their real differentiating factor. And so I find that very interesting. And I like the product and I like the management team. And yeah, it's definitely an appeal. It's the most appealing IPO I think I have looked at in 3 or 4 years. Simply, like, Reddit was interesting, and their turn towards advertisement revenue has been incredible and great to see because very few businesses seem to be IPOing and having success.
Well,
But
that's a great wrap. The best IPO you've seen in 3 to 4 years. So
yeah, good find.
let's put a ribbon around it there, Emery, because I know you know so much. You should be on the founding board of every company because you seem to know more about companies than the founders themselves. And that is a superb pitch. And I think we've got ourselves a very
Yep.
exciting IPO to watch. Is there any wrap on that, Emery?
No, I'd say I would wait the 6 months, though. As we have
Yeah,
tended to say, don't buy an IPO within 6 months. I think that's
yeah,
going to be very apparent here, simply
yes.
because we have a lot of insiders. We have a lot of staff who've been at Figma for a really long time who are probably going to they have an 180-day lockup period, and then they
Mhm.
can start to sell. I'd say we're going to see a lot of staff try and liquidate. So I would expect a drop in 6 months. Um, and on insider ownership, the two guys who founded it are still there. Dylan Fields, the main founder, is chairman, president, CEO, owns a huge amount of, I think, even after IPO, he will have the voting majority um, in terms of his ownership. So it's kind of that classic founder software story. It's very interesting. So
Awesome.
yeah,
Well done, Anne-Marie.
yeah,
Okay, well, look, let's change the mood music a little bit because I'm going to dive into a story that in its entirety is AI proof. Because every business like
solid.
Figma and everything else seems to have this AI backstory, and the future is AI, and it's going to be disrupted by AI, and we've spoken about it so often. But I was perusing LinkedIn the other evening, as one does, sit back with a glass of wine to read LinkedIn. Said nobody
That
ever.
is that's
No,
bleak. Oh my.
no, I do neither, actually. I don't drink and I certainly don't peruse LinkedIn. But I
Oof.
did see one of those LinkedIn posts that's a tome. You know, people who seem to write this like MBA
Mm,
case study as a LinkedIn
yeah.
update. I don't quite understand what's happening. And sometimes you read them and they're opinion based and they might be topical based and whatever. But this was a really in depth analysis of how President Trump's big, beautiful bill may, in fact, be very big and very beautiful for Airbnb. And was of such, like, the detail in this LinkedIn post was just beyond belief. And I took it aside and thought, this definitely deserves a little bit of research. Now, of all the people on this podcast, that's you and me, I am the
Mhm.
least qualified to talk about the bill, our bills being enacted into the US government. And arguably, if I was to include all of our listeners, I still may be the least informed about its nuances. I'm not a US citizen. I'm not a US voter. I have never been either of those things. And I have never been a US taxpayer. One of the companies I founded was, but that doesn't mean I knew what was happening. So what I did do, however, was researched the legitness of what I was reading on LinkedIn, and it certainly appears to be 100% true. And therefore, I feel it merits a short conversation here. So let me take it from the top. On the 4th of July, President Trump signed the One Big Beautiful Bill Act into law, which everybody knows is a big sweeping tax reform package with huge, massive implications for small business owners, real estate investors, and in particular, short term rental hosts. Now, the bill covers a whole load of tax measures, and I haven't a clue about most of them, but the ones of particular interest I'm going to speak about now. But it's especially generating excitement among Airbnb and short term rental property owners because of three major provisions that are worth talking about because I really think that this is ultimately going to translate onto Airbnb. The first is the return of 100% bonus depreciation, this, which I'll explain in a second. The second is a major expansion of Section 179. And the third is an increase to the state and local tax deduction cap. So that's quite a lot of industry lingo. And if you're not a real estate investor, it just sounds like a load of word bingo. So I thought I'd, as I said, read up on it and try and unpack what this means in plain English. So, first up, 100% bonus depreciation is back. And this headline grabbing part of the new bill is the return of the depreciation, 100% bonus depreciation, which means that real estate investors can deduct the full cost of property improvements or equipment upfront in year one rather than over very many years. And this is absolutely huge. So, in the past, property improvements and fixtures were depreciated slowly for residential real estate, typically over 27 and a half years. So, under normal rules, a property worth $500,000 would yield about $18,000 a year in depreciation. Now, with this bonus depreciation from Big Beautiful Bill Act, investors can front load the deductions. So if you bought a $500,000 property and commissioned, for example, a cost segregation study, which separates items out like furniture and appliances and air conditioning and landscaping and whatever it is you need to do to the place, you could be able to deduct between $150,000 and $200,000 immediately. Cute to sweet. Right now, you've bought a $500,000 property. You've had a bunch of guys and girls walk through, write up a report. Next thing you're deducting 150, 200 grand. That's unreal. And these are like paper losses that don't come out of your pocket, but still reduce your taxable income, which completely augments your should I do it spreadsheet. So if you're someone in America looking at doing a $500,000 Airbnb, very suddenly the business case has gone from flickering amber to green to luminescent, iridescent green that could be seen from the Mir space station. So under this new legislation, as I said, the 100% bonus depreciation applies to properties placed into service from the 1st of January of this year. And it's scheduled to phase out gradually, but I think it's definitely safe till the year 2027. So that sounds to me like reason for gold rush number one, for those who can afford it, because really this is speaking to those who are already, I would presume, on the right side of the line. Now, wait, there's more. There's this thing called a short-term rental loophole, and it still applies. And it's even more significant for Airbnb hosts. The fact that these depreciation benefits can potentially offset active income, like a salary or bonus, and that's thanks to what's known as the ST or loophole. So normally real estate losses are considered passive and they can't be used to offset against your W-2 or your business income unless you're a full-time real estate professional. So if you've got a mom and pop store and you've got this Airbnb over there, you couldn't transpose, if you like, the tax losses into your mom and pop store. But typically it means that you'd need to be working 750 hours a year in real estate and spending more of your half your working hours to actually benefit from this tax thing. However, now, thanks to the Big Beautiful Bill Act, do we say act? I don't know. Thanks to BBB, the STR loophole carves out an exception for short-term rental owners. So if your average guest stay is under 7 days and you meet certain activity thresholds like 100 plus hours per year of personal involvement, which is nothing, and besides only you measure it, or 500 hours of material participation, you can treat this and write it off. So that means that you suddenly have two mega reasons to enter the Airbnb market. I mean, it's a super powerful mechanism that for some investors wipes out their tax bill for a year or more. I mean, like, even if you were never considering going in to become an Airbnb landlord, this is a call. This is like, I don't want to say it's a property for nothing, but yeah, can you just imagine if such a thing existed in Ireland? And that's a whole conversation unto itself. I shouldn't even creak that door open a little bit because that's an entirely different conversation. But the bill, finally, as I mentioned, it also makes substantial upgrade to this thing, Section 179, which is another tax provision that allows businesses to immediately expense qualifying purchases. And previously that was capped at $1 million. And the new legislation raises that not to 1.2 million or 1.5 million or 2 million, but to 2.5 million, which means that small businesses, including many Airbnb operators, can deduct more of their startup costs in the first year. And again, when you plug all this into a spreadsheet, it is, as you'd say in Ireland, a no-brainer. You just go and do it if you can afford it. And the Section 179 applies to things like furniture and equipment and blah, 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 blah. But for Airbnb hosts, this basically means being able to deduct the full cost of things like beds and TVs and hot tubs and kitchen and exterior lighting upgrade, all of everything in year one. So when you combine that with this bonus depreciation and then all the other reasons, you are now looking at something that, in my mind, as not yet reflected in Airbnb, is going to be a slingshot for Airbnb. Like, there's even more in this big, beautiful bill. Apparently, has also brought in a SALT deduction cap increase, and SALT is state and local tax, SALT. And it was previously capped at $10,000. Now it's $40,000 for 5 years from 2025 through to 2029 inclusive, but only for individuals earning under $500,000 per year, which is, I would imagine, the vast majority of everyone. So for middle and upper middle income property owners, this change alone could offer thousands in annual tax relief. The whole thing, Anne Marie, is like a white collar lotto win. Like it's actually beyond belief. And that's why when I read this LinkedIn update, I went, that cannot be true. And this guy went through methodical analysis of, what it means for him. I don't know who it was. I should really credit him because it was a fine LinkedIn post, reposted by someone else, so it wasn't someone known to me. And supporters of the bill argued that the tax framework will indeed kick off a short-term rental gold rush across the US, making it financially viable for far, far more people to enter the Airbnb market with relatively small upfront capital. So let me just conclude by hitting you with a worked example. So if you buy that $500,000 property that I mentioned, and you pay 20% down, so $100,000 investment under the new rules with cost segregation and bonus depreciation and this, that, and the other Asian, you could deduct $150,000 to $200,000 in year one. You've put down 100 grand, and next thing you've got 200 grand coming in the back door. It's like, hold on, let me think about it. Yeah, I'll do it. So it doesn't just make the property more affordable, it enhances cash on cash returns and accelerates break-even points to an unforeseen level. And I don't really know how the Big Beautiful Bill Act was devised and written, and the steps in going through this, and how many consultants are involved, and lawyers and tax consultants. But really, it's something else. I mean, the tax advantages, they don't eliminate the need for all the obvious stuff, like you got to choose the right market and the right property and managing the occupancy and putting it up in Airbnb and all that other stuff that I think is a pain in the ass. That's why I'm a stock investor. But the reality is, you're like, it's like, hold on a minute, I'm going to drop 100 grand on this $500,000 property. 200 grand is going to come back into my business and other stuff thanks to tax breaks. Like, what's not to love? So the real question, and the reason ultimately that I'm interested, is, will it move Airbnb shares? And I have to admit, a lot of these benefits are time sensitive. And as I read through the Big Beautiful Bill Act, oh, what a name, and drop lumps of it into ChatGPT to say, summarize this page, summarize that page, tell me in plain English what it says. The depreciation is only guaranteed through till 2027, but that's not like tomorrow. That's 2 years away. Go for it. And the salt cap sunsets in 2029. I mean, it's 2025. Let's do it. So there's no guarantee of future that the next administration, whoever comes after Trump, is going to extend or maintain these policies. We all know that. But it's not an enduring change in Airbnb's model in America. But like, the Airbnb and every other giant business like Tesla and Google and the likes, their news changes from week to week. So to have something that's kind of ring fenced for the next few years is good. And the market has not recognized this change with respect to Airbnb. About half of Airbnb's revenue comes from the USA. I think it's like 46% or something like that. And the market has just been hit with an array of policies that will present themselves at Airbnb's numbers in the next couple of quarters from now, because there is, unless everything I've read, researched, understood, and called people with an expertise in the area, if everything I've read and understood and been told is wrong, this will actually cause a gold rush, and it could reshape the landscape of short-term rentals in the US, particularly for small business owners and part-time investors. And the share price, I have it here in front of me. I have the 5-year share price. We all love me describing the shape of a graph. It's kind of flat. It's like a little kind of drumland. It looks like County Monaghan in Ireland from the side if you sliced it. It's up and down a bit, but it's gone nowhere. The Airbnb share price has been banal at best. It's been a boring share to own. It's a wonderful business that's gotten better, but just hasn't translated, because there's always something in the news like Barcelona says no, or get out of my town, are you ruining our property market? But what this thing says, the big beautiful Bill Act, I kind of pictured a kid with a crayon just writing on the top, buy Airbnb.
Wow. Well, it's a terrible time if you're trying to own a home to live in, but a great time if you need it for your Airbnb
Now, are you
business.
speaking in America mode? Now, we're here in Ireland, and we both know Ireland is an absolute bloodbath. It's an unethical mess. But tell
It's
me
the
about
same in the US, I
some in the
think. Yeah.
US.
Yeah, it's the median house price in the US is it's the same. They always do that comparison of the median house price back in like 1970 in comparison to the average wage. And back
Mm,
in the day it's
yeah.
about 4 times the average annual wage, and today it's 8 times. And it's the same. It's the
Mm,
same kind of globally where everything,
yeah.
unless you want to own property in Japan, apparently it's very cheap there. They're giving houses away in Japan.
Wow.
Um but because declining population.
And
So
also
there's
rural Italy, which I can assure you I can think of worse
yes.
places to live.
That is true. In a couple years, we should move my Wall Street to rural Italy. That would be funny.
We
Like
have done it by moving a lot of it to Ronda, south of Spain.
yeah, that is
So,
true. And Mike is in
mm,
France, so
Mike's in France.
yep, we should really be a travel series. Stocks once a
Pivot.
week, travel
Yeah.
series the other 4 days of the week. Um, yeah, I mean, I do think the big beautiful bill probably will be debated by macro and micro economists for the next
Mm,
several years,
mm.
but it does seem. I mean, I think the short term idea is just there's a lot of money is going to be freed up to move around. Um, the long term impacts of that, I'm sure we will feel at some point. But it's a very interesting argument for Airbnb. I'd have to go look at what percentage of the American market makes up their revenue. It's still a
It's
very
about
solid portion.
46, 47%. Like, it's nearly
Yeah,
half. So
fair
it's
enough. Yeah,
so
yeah.
yeah, I don't know what do you say the median house price was in America?
I think it's like 400,000.
So a $500,000 property, as I modeled, is above the median. I mean, I know you're
Hmm.
not going to buy a place downtown Manhattan with that, but if you're in Midtown Alexandria, Virginia, you very possibly be able to afford something out there that's an appealing Airbnb option. And if you have
Yeah,
a normal salary with a normal wage and you're paying your tax, oh, it just seems like a great thing.
yeah.
Anne
All
Marie,
right.
that was a really good show. And the top
Mhm.
takeaway from me is sign up for Horizon, folks, and you'll get a free
Yeah.
ticket for Investicon. You'd be crazy not to do it. It's a better deal than the Airbnb thing in the Big Beautiful Bill Act.
Yeah, I'll stick links for that in the bio below, so you don't
Yeah,
need to wander far. I think that's everything for us this week. Make sure you like and subscribe to us on whatever platform you listen to us on. Leave us a comment. Comments are great, guys.
a
They
nice
help. They
comment.
help get more eyeballs on us. Share us on social media.
Like and follow
Everybody's
for
active on
more.
social media.
Spam that like
Exactly.
button, 5 stars, leave a review.
Spam that like button. Exactly. That's exactly what we need.
Like,
I,
unlike, like,
I
unlike, like,
want
unlike.
perfect. I will get a notification for all of them. And yeah, put us on your Instagram story. Make a TikTok about us. I would like to see retweets on every tweet this week. That's what we need. So that's the
Please,
goal.
folks, come on. Throw
Yeah.
us a line for crying out loud. If you're not going to
Yeah.
sign up for Horizon, at least throw us a like.
Come on. I know we're growing. We just got new metrics in. Like we're adding new people all the time, but we have to add more. There has to
Mm,
be even more.
more's not
Okay.
enough. It's the American way.
Yep. As we just heard. Okay.
All right.
Um, that's all for us this week. Talk to you again
Good to
next
see you,
week.
Emery. Bye.